Tom Borelli is with us. He's a Conservative Review contributor, and Patrice Lee Onwuka of the Independent Women's Forum. Patrice and Tom, great to see you both. Patrice,
good to see you too.
You know, the president, he's tweeted about 6 dozen times on the market. His policies adding about $8 trillion in value to U.S. stock portfolios. But the markets are falling out of bed right now and down the stairs. We're back at around June levels. What do you think? Is this going to hurt the president?
I don't think so. I think most Americans are not looking at the market every single day. I think particularly people who voted for President Trump and are going to be conservative voters, they're thinking about how he and Republicans have delivered on promises, everything from 2 Supreme Court justices to, historically high, low unemployment rate, particularly for demographics like Black, like Hispanics, and like women. So I think while the markets will be volatile, I don't think most voters it's going to be top of mind for them.
Okay, Tom, to you, what's your reaction?
No, I agree certainly with Patrice. Look, the market has actually been almost on a 10-year bull run, and it really has accelerated with President Trump because he cut taxes and he cut regulations. That's been a huge boom to the economy itself. What last quarter GDP was 4.1, 4.2%. We just had a 3.5 print today of GDP. That's great for our economy. The market goes up and down. In fact, it's really good that the market is getting a correction because corrections are healthy. We'd rather have a correction than really a big drop. So I think all is well, and I think President Trump voters really realize that. And even those hardworking Americans that he promised to get jobs, look at the unemployment rate. Very low, record lows with Black and Hispanics. So it's really a booming economy. President Trump just needs to focus on the job creation, and he'll be just fine.
You know, Patrice, you've made the important point that Tom has just made, too. Consumer confidence is at generational highs. So is small business confidence at generational highs. People are going to go into the holidays feeling pretty good that they have a job. They're going to do a lot of great holiday, Merry Christmas spending. So that's what we're looking at, right, as we pull into the fourth quarter.
Yeah, I think so. I mean, I think when you look at Amazon, I know their stocks are down, their Q3 was down, but they're going to be one of the biggest retailers this holiday season. So I think you'll see some of these tech companies that are online retailers do really well. I will say, though, that there are a couple of areas that we have to keep our eyes on. I mean, the housing market right now is starting to struggle, and that has a lot to do with interest rates. And that's where the Federal Reserve really plays a role. I think that's the reason why President Trump has been calling them out so much for it. And then there's the tariffs issue. If you're in an area where tariffs are hitting you, I think that is also something that you're going to be thinking about.
Tom, President Obama's out there taking credit for the economic recovery, and Trump is saying, hey, wait a second, you didn't build that. What's your take on President Obama here?
Well, President Obama really said President Trump would need a magic wand. Well, it really was a magic wand. President Trump fundamentally is a businessman. He knows what happened when you give businesses incentives. The market will take over. And in some ways, President Trump is a victim of his own success. Because the economy is growing so much, the Federal Reserve, to Patrice's point, is starting to tick up interest rates, and that's starting to hurt little consumer spending with respect to cars and even the housing market. But we haven't seen inflation yet. So I think President Trump is right that it's time for really the Fed to pause a little bit because we haven't seen the inflation, which is one of the 2 things they really worry about.
Patrice and Tom, you've been terrific. Thank you so much. Have a great